Good evening. This is Doc Severson for the Theo Night Report for Tuesday, April 3rd. I've got a triple chart of the S&P 500 ETF spiders up here, and the question on everybody's mind is this price just going to fall off the edge here into oblivion, or is it going to find support and start to bounce from here? So that is the million-dollar question right now for this week. And we may know the answer to that by the time that we end up on Friday. Now, to me, the answer is not a prediction. It's not a looking into a crystal ball and using technical analysis to come up with some kind of prediction or forecast as whether that's going to happen. What I'll show you today is more of a framework for understanding how to evaluate what I will do depending on what the price does. It's not about predicting the future. It's more about understanding what you're going to do and building a decision framework for you to handle the forward price movements. So let's zoom out for a second. On the macro view here, again, the 2017 rally that we had up here, which is one of the biggest FOMO rallies I've ever seen. In fact, this is the most extreme rally I've ever seen in recent times on the S&P. That got us to this level of exhaustion, which I've never seen this value before. Okay, so what does this need? What it needs to recover from that level of exhaustion is a transition from quiet and trending market character into sideways and volatile. Sideways and volatile is exactly what we've been seeing for the last 2 months. And in fact, if you go back the last few months or so before we got into this, in early February, I was talking about the need for us to move into a much larger range, a much deeper range, and that was all the way up probably from about 240 on. I was calling for this, and it seemed like it would never get here, but that's usually the case where we have this runaway market, because this is what happens when you get people chasing after a market. So typically, a lot of the gains will come at the very end of a quiet and trending bull, and now we're firmly into sideways and volatile. And as I've mentioned many, many times before, once this finally ends up recharging, then one of two things will happen. Eventually, it'll either break back out into quiet and trending, or we will transition into trending and volatile, which is another code word for bear market. So obviously, a lot rides on what happens next in markets in the next month or two. So that begs the next question. How long do we have to wait before we find that out? Well, more than likely, we have got to wait until the monthly chart recharges or restores into a normal format again. So this may take another couple of months before we're ready to see what happens with that. Now remember, tops are a process. Tops are a process, so tops usually take a torturous amount of time before they resolve and they figure out what they want to do in the next state. Okay, so that's the macro picture here. We're stuck in this range. We're stuck in this large range. Right now we're probing the bottom end of the range. As we did make that initial shot over the bow in early February, one of the things that I mentioned back then was to say, look, we'll probably see both ends of the recent highs and the recent lows tested. Now, we almost got the upper end of this tested. I would say we're very, very close to testing this, if not already. So does it have to undercut? That would be my preference, quite honestly, is to see an undercut of this. So perhaps going down to 250 or not. And the only reason that I'm saying this is that because I want to see a little bit more fear come back into the market again. As Don and I have been talking about lately, is that the fact is that implied volatility has been doing a lousy job of forward pricing in the actual realized volatility. So it's been underestimating the actual realized volatility. And that's because there's been no reason to think anything else, because this is the type of volatility that we've been dealing with for the past couple of years, which is really very, very mild. No real dips, finally it took forever to get our first 10% dip in for this. So right now the market is just not keen on pricing in excess volatility. So we may need something like this. We may need a scary event. But anyway, that's just my opinion. The market can do whatever it wants to do. So before I leave this actual chart, I want to make mention that the expected move for the week, which was nailed yesterday, it was run through yesterday, but it did close at or above that expected move level. And today also tested that again, and then it rebounded from that. So the expected move for the first time in a number of weeks is actually operating as, in this case, support. Now what I want to do is I'm going to move over to the S&P futures, because the S&P futures gives us a little bit more realistic view about the extremes that we've seen, especially the ones in early February where we had that initial move down in the pre-market and then we actually ended up higher than that. We didn't get anywhere near there during the cash session. But what we have on the daily chart, this is quite clearly what I would call a bear flag. So a bear flag is just a consolidation pattern after an initial move which brought us down to exhaustion. So this all makes sense. We should be breaking down from the bear flag pattern under the 200-day moving average. We should be undercutting somewhere close to the 2,500 level if this is going to play out. Now, it doesn't have to just play out just because there's some formation showing up on here and saying that, well, this is what has to happen. Again, price can do whatever it wants to do. All we're doing is looking at this. We're analyzing this based on past behavior. Past behavior normally shows that with a flag pattern like this, after a flagpole, we have the flag pattern. We usually break down from here. But here's something else that we can use as framework as well, too, which is just a simple trend line. Descending patterns break to the upside. They have to. Descending patterns have to break to the upside. So unless this price is going to go to zero, which is not going to happen, then we'll eventually break this trend line. So what we're seeing with this 78-minute chart, so this is when I will actually go down to 1, 2, 3, 4, is go down to a chart speed which is 1/5 of the daily chart, at least during the cash session it is, and start to look for the trends here. So we have lower highs, lower lows, all the way along here. Lower highs, lower lows, lower highs, lower lows yesterday. And so far today we had a little bit of a rally, but again, it's just another lower high in the context of a larger time frame downtrend. And on top of that, it's a bear flag. So my rule number one of price action is that larger time frames dominate the trend. Larger time frames dominate the trend. So if I'm looking over here at the 78-minute chart, well, whatever's happening at the daily chart is going to override that. Larger time frames dominate the trend. But rule number two is that reversals start from the inside out. So reversals will happen at the smaller time frames. So if we have something that either happens like this, where we rally above the recent high and begin the process, or it can also happen by coming down here, printing a higher low, then a higher high, eventually having to break that trend line. So we can either break the trend line before or after we start to transition to higher highs and higher lows at the smaller time frame. What that will do is that will propagate over to the larger time frame here, in this case the daily chart, and start to drag it up above that trend line as well. And then it too can start to take out some of these higher highs and higher lows. So in this manner, what I essentially do is to frame in the price action. We just frame it in. We set up a framework for making decisions for this where we're not predicting what's going to happen next. Again, based on the trend, we should be going lower. We should be going lower, but price can do whatever it wants to do. And of course, reversals start from the inside out. So if it is going to reverse, it's going to happen at a smaller time frame first. We'll keep our eyes on this. And all we have to do is just sit back and watch and act accordingly as the price starts to show either, once again, movement to the downside, in which we're going to look to sell premium, at least I am, or we can look to get directional with long delta spreads as we get above this trend line. Hey folks, before you go, I want to talk to you for just a minute about the TheoTrade Live Return of the Trader event. Why are we calling it the Return of the Trader event? Well, because we believe, and we've already seen, volatility returning to the market as of February and March, and we think it will continue going into the rest of this year. So there's no better time than now to get prepped for all this volatility than at this event, because this is what we're going to be focusing on. So look at all these happy people from our last event. You can be one of them at the next event, which is coming up the beginning of May. So May 3rd, 4th, and 5th. I'll get into that in just a minute. Right now for members, the members are getting pricing of $1,100. So you've got until April 1st to get this price level. Otherwise, it's going to end up going up again. And also, don't forget that the event is limited to 200. So once we do sell the 200th ticket to this, we will shut down admissions to this event. All right, so where is it at? When is it going to happen? All those things. So it's going to occur at the Scottsdale Resort at McCormick Ranch in Scottsdale, Arizona. This is where we were last September. It is a really, really nice place, and I'll talk to you a little bit more about that in just a minute. So who's this for? Intraday traders, swing traders, income traders. We've got something for everyone here. So again, on the 3rd of May, May 3rd, is where we have the event registration and the happy hour. So you can meet all of us live, can corner us in the room and ask us questions. And drinks are on TheoTrade, so don't forget that. We also have a quick event for you guys with Jeff and Don coming up. On Friday, May the 4th, this is when everything kicks in here. First session of the day will be Return of the Trader by Don Kaufman. And then we'll shift into Jeff Bierman. Professor Jeff Bierman will go into negotiating intraday volatility shifts, something that's very, very important in this type of volatility. The last session in the morning will be Perfecting Your Nasdaq and Intraday Trading Style by Tony Rago. And after lunch, I'll come on board with Fractal Analysis Intensive. So we're going to be talking about fractals in the context of what's happening in the market today. And then we'll go into Taming the Trend Day by Corey Rosenblum at the end of that day. So that is Friday, May 4th. So it's a market day. And then we will have the second day, Saturday, May 5th. And we're going to go right back into Don first thing in the morning. Probability and Profitability in Trading by Don. Price Action Intensive, again, by myself. So I'm going to be going into specifics of reading price action. Tony will go into more about intraday trading, the Nasdaq E-mini. Don Kaufman will go into the state of the markets. We'll talk to Corey for creating your game plan for the next trading day. And then we'll have all of us up front, closing ceremonies, final giveaways, and everybody is sent home at that point on Saturday evening. So you might be saying, well, that all sounds great, but what's in this for me? Well, we've got 9 reasons here as to why we think this is a good event for you. First of all, just hearing repetition, practice and repetition over the next 2 days as we conduct this seminar. You're going to hear the same things again and again, and pretty soon you'll start to think in the same way. Don't forget that almost all of us trade at home or in our office by ourselves, and many times we don't feel like we're connected. Well, this is where we can also show you that you're part of a bigger community. You're going to hear from others and understand what they're doing in today's market. And by doing that, you'll discover your one-of-a-kind style. This is where you form your own trading strategies. You're going to be talking to not only the instructors, but also other people in the room to gain their wisdom, get their approach from things. Understand how to risk manage in today's market, play it safe and play it profitably. And make sure that you're not trading just out of boredom. We're not going to get boredom in this year's market, but making sure that you're looking for just the best setups and then being decisive about taking those setups. And then finally, ultimately, this is what we're all after, is that peace of mind and freedom that all of us are looking for through individual trading. Now, this is not some event where we just sit up at the front of the room and put a virtual wall in between you and us. You're going to meet all of us. You're going to talk to us at the breaks. We are here for you, to talk to you. So Don, Jeff Bierman, myself, Tony Rago, Corey Rosenblum, as well as your other 200 attendees. Now let's talk about the actual location, the Scottsdale Resort at McCormick Ranch. And I'm particularly excited to talk about this because there's some really cool things about this place. So it's pretty easy to get to. It's not that far from the airport. It's a world-class airport. You should be able to get direct flights in just about regardless of where you live. Let's talk about the venue for a second. This is what a typical room looks like. And I do want to mention, I mention this every time I talk about this event, but I love the chairs that they have here. The chairs have got armrests. You're not going to be sitting here playing elbow wars with a guy next to you. They recline, so you're going to be comfortable all day long. You're not going to be sitting on some little narrow, tiny banquet chair that's going to wear you out after 3 hours. The weather should be excellent at this time of year. There's all kinds of events and outdoor activities that they have at this particular ranch. Now let's talk about the meals as well too. This is where, again, I get excited about this because breakfast, this is not just any breakfast. This is a really, really good breakfast served on Friday and Saturday, as well as the lunch. So we bring in the lunch. We bring in the lunch here for you guys. Bring in the lunch. So both days we're going to serve you breakfast and lunch. For dinner, you're on your own because a lot of people want to go explore the area. But what we find is a lot of people get together as groups anyway and go out to eat for dinner. So anyway, get your ticket right now. Make sure you get it in before April 1st to be able to get that preferred pricing. Don't miss this event. This is a great time. There's a lot of terrific information that's brought out there. Everybody walked away with a smile on their face last time. We want you to be one of those people to join us as well too. Hope to see you out there. Take care.